Welcome back to another episode of Market Brief After Hours. We've got a packed show for you today, dissecting a highly active week across global equities, shifting currency trends, and some massive developments in the crypto and geopolitical spaces. Let's dive straight in. Wall Street wrapped up the week on a high note, largely driven by big tech. How did the major indexes perform on Friday, and what drove the weekly momentum?
It was indeed a strong finish to the week. On Friday, the S&P 500 rose 0.42% to close at 7,575, securing a weekly gain of over 1%. The tech-heavy Nasdaq composite also put up solid numbers, adding 0.29% to finish at 26,282, which likewise put its weekly advance at more than 1%. The Dow Jones Industrial Average gained about 150 points, or 0.29%, to settle at 52,637. However, unlike the other two, the Dow actually slipped 0.5% on the week. The big story on Friday was really about tech resilience, specifically names like NVIDIA and Meta platforms pushing the broader market higher.
Right. Meta had an incredible week, didn't it? Up about 6% on Friday alone?
Exactly. Meta surged roughly 6% on Friday, bringing its weekly gain to nearly 15%. That's its best weekly performance since early 2024. The catalyst was a Bank of America note maintaining a buy rating, pointing to an internal memo showing Meta is successfully improving its artificial intelligence cost structure. NVIDIA also did its part, climbing about 4%. But it's not just these giants. We also saw the highly anticipated U.S. debut of South Korean chipmaker SK Hynix on the Nasdaq. It opened at $170 and closed up roughly 13%. There's some concern that this new listing might draw capital away from domestic memory players like Micron, but it shows how insatiable the appetite for AI-related hardware remains.
Let's look at the global picture. How did international markets react to these tech-driven moves in the broader geopolitical backdrop?
It was a mixed bag across Asia and Europe. In Asia, South Korean stocks actually led the charge ahead of SK Hynix's U.S. debut. The KOSPI index jumped 2.52%.
Why the hesitation in Europe? Was it purely geopolitical tension, or did economic data play a role?
Both, really. Geopolitical friction between the U.S. and Iran kept investors on edge, but we also had a flood of economic data. On the bright side, inflation is cooling. Germany's annual inflation rate slowed to 2.3% in June, down from 2.6% in May. France also saw its inflation ease to 1.8% from 2.4%, driven by a sharp drop in energy and petroleum prices. Even Portugal and Norway reported softer inflation figures. But it wasn't all good news. Italy's industrial production fell 0.3% in May, which was slightly worse than expected and reversed the previous month's gains. So European investors are balancing slowing inflation against signs of economic cooling.
Let's talk about those geopolitical tensions. We saw some wild swings in oil and bond yields. What's the latest on the U.S.-Iran front?
It's a very fluid situation. Earlier in the week, President Trump declared the ceasefire with Iran was over, sparking fresh missile strikes and disrupting shipping in the crucial Strait of Hormuz. Naturally, oil prices reacted. Even though Brent crude fell 0.4% on Friday to close at $76.01 a barrel, and WTI fell 0.93% to settle at $71.41, both posted substantial weekly gains. Brent rose about 5%, and WTI gained 4% over the week because of that high risk premium. On the Treasury side, yields moved higher as investors tracked these developments. The benchmark 10-year Treasury yield rose to 4.561%, while the policy-sensitive 2-year yield climbed to 4.208%.
Before we take a quick break, we have to touch on the crypto space. Bitcoin broke back above 64,000, and there was some massive regulatory news for stablecoin issuer Circle.
This is a major structural shift for the industry. Circle, the issuer of the USDC stablecoin, received approval from the OCC to operate as a trust bank under the name Circle National Trust. This allows them to manage their own reserves, which back over $73 billion in USDC, directly, rather than relying on third-party custodians. While it's not a commercial bank charter that lets them make loans, it's a huge step toward crypto companies owning more of the regulated financial stack. Circle shares jumped nearly 5% on the news. Meanwhile, Bitcoin rallied strongly towards $65,000, up over 15% since the start of July, buoyed partly by reports that Iran requested a continuation of nuclear talks.
Incredible developments. We're going to take a very brief pause, but when we return, we'll dive deep into the Forex markets, technical levels for gold and silver, and run through the biggest individual stock movers of the day. Stay with us. Welcome back to Market Brief After Hours. Let's shift our focus to the foreign exchange and commodities desks. We've seen some decisive technical trends developing lately. Let's start with the euro and the pound.
The Euro-USD pair extended its downward trend, closing down 0.12% at 1.1416. Technically, the sellers are firmly in control. The pair is trading well below all its major moving averages. The 50-day simple moving average is at 1.1560, the 100-day is at 1.1603, and the 200-day sits at 1.1646. Unless we see a break above the immediate resistance at 1.1461, the path of least resistance remains down toward the recent support at 1.1412.
And what about the British pound? Is it showing more resilience?
It's in a much more neutral, consolidated state. GBP USD closed virtually flat, down 0.07% at 1.3399. What's fascinating is how tightly coiled the price is within a cluster of major moving averages. It's sitting just above the 50-day SMA of 1.3394 and the 200-day SMA of 1.3398, but just below the 100-day SMA of 1.3403. It's a classic battleground between bulls and bears right now. If it can hold above the daily low of 1.3392, the recovery structure remains intact, but a break below could trigger a deeper pullback.
What about the Japanese yen and the Swiss franc?
The USD JPY experienced a minor pullback, closing down 0.40% at 161.70. However, the broader bullish structure is still very healthy. The pair is comfortably above its 50-day SMA at 159.98, the 100-day at 159.27, and the 200-day at 157.05. Meanwhile, USD CHF resumed its upward trajectory, closing up 0.33% at 0.8086. It's holding strong above its 50-day SMA at 0.7942 and 200-day at 0.7913, showing sustained buying interest.
Turning to commodities, precious metals have had a rough ride recently. Gold and silver seem to be trying to find a floor. What do the charts tell us?
They are definitely in deep bearish territory, but attempting to stabilize. Gold closed down 0.33% at $4,110. It's trading way below its key moving averages. The 50-day SMA is up at $4,370, and the 200-day is at $4,471. We're seeing some horizontal consolidation near the $4,000 zone as buyers try to defend the $4,073 level. Silver is in a similar boat, closing down 0.35% at $59.74. It is heavily depressed below its 200-day SMA of $69.38 and 50-day SMA of $70.22. It's consolidating near recent lows, which looks more like selling exhaustion than a true reversal just yet.
Let's look at some individual stock stories that caught our eye today. Aside from Meta, who were the big winners and losers?
One of the standout gainers was EquipmentShare.com, which skyrocketed over 17%. They raised their full-year adjusted core EBITDA guidance to between $1.95 billion and $2.06 billion, up from their previous estimate. They also announced a massive $500 million share buyback program, which investors loved. WD-40 Company also had a great day, closing up more than 10% after boosting its full-year net sales forecast to a range of $652 million to $667 million.
And on the losing side?
Netflix slipped over 2% following a Wall Street Journal report highlighting steps the company is considering to combat declining subscriber engagement. Delta Airlines also fell more than 2% after reporting second-quarter passenger revenue of $15.61 billion, just missing the Wall Street consensus of $15.63 billion. Finally, Lamar Advertising fell nearly 5% after Citigroup downgraded the stock to neutral from buy, citing an unfavorable risk-reward profile, even though Lamar expects solid adjusted funds from operations for 2026.
A lot of moving parts to keep track of as we head into the weekend. From the ongoing AI boom and geopolitical tension in the Middle East to cooling inflation in Europe and key technical levels in Forex and metals.
Absolutely. It's a market driven by structural shifts, whether that's in tech infrastructure, crypto regulation, or energy supply lines. Staying on top of these technical support and resistance levels will be key for the weeks ahead.
Well, that's all the time we have for today's episode. Thank you for listening. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform. We'll see you next week.